employers is the culmination of ERB's outreach efforts over the past year on GASB statements 67 and 68. For those of you who have attended any of these meetings or have been reading about GASB 68, some of this information should seem very familiar. Today, we'll be going over the reasons for GASB 68, key terms associated with GASB 68, how to find your allocated share of ERB's actuarial amounts, as well as how to explain GASB 68 to your stakeholders. All ERB employers must implement GASB 68 with their 2015 financial statements. ERB was one of the few pension plans to early implement GASB 67. I hope that you have already located our schedule of employer allocations and pension amounts. It's on our website, www.nmerb.org, under Employers. There you will also find a great deal of helpful information on how to implement GASB 68. Please note that each employer is responsible for the information in their financial statements. ERB has worked hard to ensure that you will have all the information you and your independent public accountant need to successfully implement GASB 68. This morning, we will be presenting our primer, a practice reporting exercise, and tell you about additional reference materials to help you with the process. And because we're such a small, informal group, please feel free to ask questions during the presentation if something isn't making sense, or at the end we'll also have time for a formal Q&A session. GASB is the acronym that stands for Government Accounting Standards Board. They're the group that decides what information should be recorded in the financial statements of public entities and how those amounts should be recognized. First, I would like to explain the distinction between GASB statements 67 and 68. GASB 67 applies to pension plans like ERB and describes how the actuarial pension liability will be shown at the pension plan level. GASB 68, on the other hand, describes the employer requirements, recognizing an allocated portion of the pension plan's net pension liability on the balance sheet. With these two statements, plans and employers are to employ the same assumptions to measure and report similar or related information. So at this point, you are likely wondering, why are we doing this? From time to time, the GASB reviews their existing standards to see if they can be improved by increasing accountability and transparency for the users of the financial statements. GASB 67 and 68 were issued to improve the transparency, consistency, and comparability of the pension information reported by the state and local governments and pension plans, and to reflect the liability and expenses related to the pension where the employment exchange takes place, that is, at the employer level, as well as to provide a distinct division of accounting from funding for pensions. The primary objective of these statements is to improve accounting and financial reporting for pensions. This slide highlights the differences between the roles and responsibilities of pension plans and the employer participants. As you can see, ERB administers a cost-sharing pension plan that New Mexico's 213 educational employers participate in. We engage an actuary to calculate our GASB 67 total pension liability and provide to the employers audited schedule of employer allocations and pension amounts. This includes the net pension liability, expenses, and deferrals on an employer-by-employer basis, including the necessary disclosure information for the notes to the financial statements. And you, the employers, will implement GASB 68 by establishing the new reporting process and controls, reporting some of these amounts on the face of your financials, including appropriate and reliable information in your financial statement notes, and using your independent public accountant to evaluate and handle your individual facts and circumstances. You, the employers, will also be carrying forward some of the expenses year to year as they change based on the actual experience of the plan. There will be more on this later. This and the next two slides contain some of the key terms associated with GASB 67 and 68. ERB is an example of a cost-sharing multi-employer pension plan. We administer a defined benefit pension plan for our 213 participating New Mexico employers who share benefit costs, assets, and obligations. Each of the employers recognizes only their proportionate share of the pension plan's cost and liability. The plan's net pension liability, or NPL, is the difference between the total pension liability, the present value of all the earned pension benefits attributed to past employee service, and the fiduciary net position, the fair market value of the pension plan assets minus plan liabilities. The net pension liability is analogous to the unfunded actuarial accrued liability, but is inherently more volatile because it uses the fair market value of pension assets on each June 30th. There are also deferrals of pension resources which will be included in the notes to your financial statements. The outflows are assets associated with revenues that are not yet available and are debits. The inflows are resources from non-exchange transactions and are credits. Examples of these resources are differences in expected or actual changes in economic and demographic factors, employer contributions to the plan, difference between actual and projected earnings, and changes in the employer's proportionate share of the net pension liability. As you can see, the different deferred outflows and inflows have different amortization periods associated with them, and ERB will be tracking these for you over time and reporting how they change. All of the amounts on this slide are shown at the plan level, and you will be picking up your proportionate share on your financials. Your pension expense is no longer the sum of your employer contributions paid to ERB. The pension expense that you will now include in your financials consists of changes in current period service cost, interest on the beginning total pension liability, recognition of flows, ERB administrative expense, member contributions, projected earnings on investments, and the impact of changes in benefit terms. The discount rate, which is shown in the lower bottom left-hand corner, is used to calculate the present value of the accrued benefits and is 7.75%. You may be wondering why the discount rate is 7.75%. This is an issue that the board and many others watch closely as it is used to calculate the present value of the liabilities. The 7.75 is our long-term earnings assumption for our investments, which is based on our asset allocation. You may be saying to yourself that this is more than you've been earning in your IRA account. And that's because ERB is a long-term investor, and we can invest in asset classes that are inappropriate for individual investors. So we and our actuaries regularly review this assumption to ensure that it is correct. In addition, as this is such a crucial rate, a sensitivity analysis on this is part of the new disclosures that will be in the notes to your financials. There are a number of key dates associated with the reporting. The first is the employer year end, or the date of your financial statements, June 30th, 2015. The measurement date is the date at which the net pension liability, pension expense, and deferrals are measured, June 30th, 2014. The difference between these dates means that there will always be a one-year lag between the actuarial information and the balance of your financial reporting. This is unavoidable due to the amount of time that is necessary to gather all of this information and distribute it to you. The GASB is anticipating this, and their examples in their implementation guide also reflect a one-year time lag. The date of ERB's actuarial valuation date will be the same as the measurement date. The plan dates reflect how often we receive different types of actuarial information. We have our actuaries prepare an annual actuarial valuation each year. Every 2 years, we have our actuaries do a thorough review of all the assumptions incorporated in our valuation so that we can stay on top of any emerging trends. In addition, every 5 years, we hire an independent actuary to do an audit of our most recent valuation to ensure that it is accurate and complete. At this point, we will start to work with the allocation schedules that you have brought with you. All of the schedules in the report have the employers listed in the same order. So if your entity is on the second page of the first schedule, it will also be on the second page of all the other schedules. If you turn to page 7 of the report, you will see the information on the left-hand side of this slide. And when you turn to page 25, you will see the numbers on the right-hand side of this slide. You will be using the information from these two schedules to create your journal entry, to prove your beginning and ending net pension liability, and create your 10-year tracking schedule. This slide is your template for creating the net pension liability roll forward schedule. The pension numbers in red refer to the beginning page of each schedule from which you will be pulling your numbers. The roll forward formula starts with column A, the beginning net pension liability, subtracts column B, the deferred outflow of resources, change in proportion, subtracts column C, the actuarial experience, subtracts column D, the investment experience, subtracts column E, the change in proportion, subtracts column F, pension expense, and adds column G, the actual employer contribution for the prior year, to calculate column H, the ending net pension liability. And this formula is shown on the bottom of this slide, so that you don't have to remember all of this. And the roll forward schedule is also available on our website, www.nmerb.org, under Employers. This slide shows how, on both a total plan basis and on an individual employer basis, to create two of the key journal entries to reflect your share of ERB's net pension liability and the activity for the first year. The first journal entry on the page shows how to build the opening journal entry to reflect the beginning net pension. The second journal entry shows all of the elements that must be captured to reflect the first year's activity. This includes pension expense, the net change in the net pension liability, deferred inflows of pension resources, the change in proportion of the net pension liability, the deferred outflows of pension resources, actuarial experience and investment experience, and post-measurement contributions. Another way of saying the employer contributions you paid during the most recent fiscal year. This slide shows the required supplementary information that you will be including each year in the notes to your financial statements. It is the 10-year tracking data that I mentioned a few slides ago. The numbers on this page reflect the entire ERB plan. On your financials, you will be including your proportionate share. And you've heard me toss around that term proportionate share a number of times. The way we calculate your proportionate share is by looking at the total amount that you paid in 2014 in employer contributions and looked at the total amount of employer contributions that were paid by all of the employers. So that's how we calculate your share, dividing your contributions by the total. That's the key ratio for you. The information on this schedule includes proportionate share of net pension liability, the actual employer-covered employee payroll, the employer proportionate share as a percentage of covered payroll, the plan's fiduciary net position as a percentage of total pension liability. This used to be called the funded ratio. Statutorily required employer contributions, the actual contributions that you've paid, and the difference, if any. Also included is the amounts that will be included in future years for deferred inflows and outflows and the period of time over which they are amortized. This and the next slide shows sample notes which have been extracted from the Implementation Guide for GASB Statement 68 on Accounting and Financial Reporting for Pensions. However, what is most important for you is the actual language that reflects ERB's plan. If you now turn to page 37 of the report, you can see the notes that ERB has prepared that you can include in your financial statements. The note provides a description of the ERB plan, the benefits provided, the required contributions, sensitivity of the employer's proportionate share of the pension liability to changes in the discount rate, where to find information about the plan's fiduciary net position, and information explaining changes in proportionate share. So this note is very long and will be adding to the length of your financial statement notes, but it's very important to include this. So we can basically skip over the next slide, which is more of the sample language, since you have your actual language starting on page 37.
The notes that are on our financial statements currently, those are going to disappear completely and get replaced by these notes?
The question is, will all the notes in the financials go away? This note only addresses the ERB pension plan and the benefits. So if you have anything currently in there about ERB and the pension plan, you will replace that with this. Everything else, which talks about your accounting assumptions and other estimates that you use, that all will remain in your financials. This is basically going to be new language in addition to what you already have.
Okay.
So this page is your reference guide on where to find all of the information that you will need to create the disclosure tracking schedules, journal entries, and the notes to your financials. For example, pages 1 to 6, which are Schedule 1 of the report, are the schedule of allocable proportion by employer, where ERB has calculated the percent of total actual employer contributions for each employer for fiscal years 2013 and 2014. The 2014% is your proportionate share of all the 2014 amounts. And then this slide goes through all of the other schedules and what information is there and where you will be using the numbers or disclosures in your financials. So this is a key page for you. The implementation of GASB 68 will result in financial statements that will look significantly different from your prior year's statements. The good news is that all of the other ERB employers and other pension plan employers throughout the country are similarly affected. GASB 68 does not create a new liability, but it changes where and how it's reported. You will now have a large number reflecting your proportionate share of ERB's net pension liability on your balance sheet or statement of net position, and a new expense number for your statement of revenue and expenditures. It is important to keep in mind that these numbers are not cash flows that you will be required to make. In time, as ERB pays down its unfunded actuarial liability, thanks to the 2013 legislation, these new numbers will diminish. ERB has had our auditors audit this information so that you and your auditor can rely on it. Many of your stakeholders will be concerned about how these new disclosures will affect your bond ratings. But rather than hear my opinion on this, please turn to the next page to see what one of the major credit rating agency has to say. As you can see, Standard & Poor's does not expect significant credit differentiation based solely on the new reporting. This makes sense. For many years, the credit rating agencies have known what the liabilities are, and the new reporting does not materially change them. However, I do expect that the credit markets will not treat kindly those entities that are not making changes to ensure the sustainability of their pension plans and paying off their unfunded liabilities. For example, New Jersey and Illinois have taken multiple-year pension contribution holidays, not paying their contributions. Fortunately, New Mexico's legislatures have always been very disciplined and included the employer contributions in each year's state budget. In addition, the legislature passed ERB's sustainability bill in 2013. This slide contains some great references if you want to read more about GASB 68 implementation. Most of these materials here are very clear and comprehensive, and we've provided the links for them so that you can look at them on your own if you have additional questions. And if you have additional questions after today, please contact Diane Rossback, ERB's CFO. We've got her direct line on here as well as her email address, so please feel free to contact her. And if you have any questions today, now's a great time to ask them, and you've got a lot of people here who can try and answer them for you. So, do we have any questions?
Are the footnotes available electronically on the website?
They're in the report, which is a PDF. We can put them on as a Word document if that would make it easier for you. We'll do that. Is there anything else that we can do to help you clarify? And I know it's always a big difference between sitting through a presentation and then being back at your desk and trying to do the work. So please contact us if there's any way that we can help you or your independent public accountant adopt this for you. Okay, thank you. very much for being here today and having your questions.
Thank you.